What's up, y'all? Welcome back. My name is Josh, and this is my channel, Watch Josh Trade, where I provide weekly streams, educational content in order to help traders like yourself find an edge in this crazy market. In this video, which I think will be a little bit on the longer side, we'll be covering my December monthly review. I have another video coming out in a few days where I will be covering my 2020 yearly review, where I cover my expectations for the year, a little bit about my story and how much I started out with and how I developed as a trader in 2020, some of my best trades of 2020, some of my worst trades of 2020, hot streaks, downturns, etc. And you can be on the watch out for that. If you are a subscriber to the channel, you can hit the notification to see when that comes up. All right, enough of that. Let's get into the December monthly review. Just going over some quick stats. SPY's monthly gain was 3.7%. In November, we were at the end of November already pushing the highs. And I want to be in this video, because I didn't do it in last video, I'm going to be showing a little bit more of the charts that I was looking at the time, so hopefully that works out smoothly. The Q's monthly return was 4.9%. Almost every month this year, they've returned more of a percentage. And into 2021, I don't really have a prediction about what's going to happen, but I should probably make a video on the 2021 gains or expectations that I have as well, so that I can look back at it as a trader. My portfolio monthly return was 14.6%, so I outperformed SPY, and my monthly gain was 8,600. You can always do the calculation if you want. I remember last time I underperformed SPY. November was a huge month, and I still felt okay with where I was at. So actually, I was able to end this year with my account at the high, but it was not without its struggles. So I had 15 green days and 7 red days, but my average red day was 1.28 times bigger than my average green day. And actually, as we're going to see as I do the weekly breakdown, that 4 days out of these 7 were accounted for the majority of my losses. So you know how like 8,600 is the net of what I made, but I probably made around like $30,000, and I lost, like, if you count up all the green days, it's like around $30,000. And if you count up all the red days, you know, it's around like $21,000. And on 4 days out of the 7, I had like maybe like 85-90% of that 21,000 lost. So I didn't have a good, like, and those 4 days were both on the last 2 days of the trading week. So I'm going to have to review going into next year why that's the case, what I was doing wrong, etc. But let's get straight into these weekly reviews, where I'm going to basically cover as best as I can remember, because December, it felt like a long month. It felt like there was so many things happening, which kind of makes sense. I mean, you know, people are just sort of scratching and clawing to get their last to finish at the high of their portfolio. There's a lot of funds that are selling positions in order to get their bonuses. There's a lot of, like, you know, the yearly candles closing, the monthly candles closing. There's just like a lot going on in December. And also, like, it seemed like the hangover from the election had passed, and we were into a new phase of the market that's looking forward to setting up for 2021. And in the first week of November, I can't remember it as well as the last 3 weeks, but it started out November 30th, and I just remember that my biggest winner was SE. And it was a name that I expected to continue to run throughout all of December, but we actually ended up consolidating. So let me just turn to the chart a little bit really quick. So let me just adjust this so you guys can see the chart. I'm gonna make myself smaller here. And put that down. All right, so let's turn to SE. Because I traded SE like right around here, and I remember this day on the 3rd where we basically got a failed breakout, because the breakout level is obviously above where it had tested basically twice previous. And this chart, you know, it doesn't make huge moves. It'll make, it just is basically following these moving averages. It's not like just moving up above the moving averages a lot and then pulling back. So I was kind of wary of that as I was trading this, but the failed breakout, I actually managed to make money because of my trading style. I sold when I was in a profit, and I didn't touch it again the rest of the day. But when we gapped up into the upper range the next day, I actually was able to buy the dip at the breakout level here, using like this range right here, the 183 level, as my stop. So I bought the dip and I was able to sell for a nice profit. And then I actually swung. I bought in on the inside day here, which is the 7th. So this is the next week. But I bought in on the inside day and I was able to cash out actually at the top, 212. And we had a little bit of a pullback to 185, and I was not in it throughout this pullback here. At the time I had a lot of fibs up, I had a lot of targets, and I just basically took the momentum move. And I was kind of anticipating this to hit 240 on this move, to hold above 200 and then to move toward 240 on a different sort of level. That never happened. Instead, we ended up consolidating and then rejecting right around the 202.50 level, which from my price action read during the trading sessions, 202.50, it seems like SE likes trading in the $2.50 pivot. So it's like 202.50, 205, 207.50, 210, etc. And so we basically got back up to this 202.50 mark and then came all the way back down. And now I'm back in it after we basically formed a megaphone pattern, and I'm looking for a retest of at least 202.50. So we have 3 points left, and then above that my target is around 207.50, 210, and to get the top of this megaphone pattern here. SE was a top pick for me for 2021. I posted my top 5 picks on Twitter. You can check it out at WatchJoshTrade. Because I love the confluence of I like its place in the sector that it's in, sort of like online retail. It's also doing some sort of like data center, like video. It's in the video game industry as well, and they're a global stock. And I think that the global stocks toward the end of the year started outperforming the US markets, and so I'm looking for this one to really start to push up higher at the beginning of 2021. Anyway, I was able to make, I think I made the majority of my gains on SE that week. I can't remember any other good trades. There were some other things happening with like Plug and Blink, and that would those shenanigans would continue throughout all of December. But I don't think that my gain there was as impactful as the one that I had in SE. Okay. Moving on to the next week. The next week, I actually had a little bit of an oopsie, because let's look back here really quickly. I was down. I lost almost $2,500 that week, but the thing is, I was up maybe like already $7,000 on the month. By Wednesday. So this is about 6 trading days in to December. I'm already up $6,000. And then I do a complete U-turn on Thursday and Friday. And so we can look at the price action. I think maybe SPY could be okay to look at, but I think maybe the Qs might be better because that was where the magic was happening. Okay, let me just review. So basically I was watching this trend line, very similar to this trend line right here, where we had a big sell and we ended up retesting demand. This is the beginning of September. And I was looking for a similar sell, maybe not as big, but I was waiting for this trend line to break, and when it did break, I went in short. And so on the Wednesday, this is a 12/9, that was a Wednesday, I was actually green on that day, and I felt really good about myself because everyone was freaking out, and I was like, oh, the chart makes sense to me, I understand what's happening. And the market has a way of teaching you a lesson when you think you know what's happening. The very next day, we gap down, and then we have a huge 4-hour, well, it wasn't a 4 hour, it's more of an hourly, I can't pull it up, I don't have the setting set up. It was more of an hourly bullish engulfing candle where we gapped all the way down. We basically touched the or like we created a wick, and then every single name that was beaten down that I had been previously just trading long along this trend line just shot up. And so Crowd, Roku, Zoom, DraftKings, I mean, this is a time when basically I was caught with my pants down short, and I basically had to stop out of all my short positions. And I didn't stop out of all of them because you can see that we actually rejected. We filled and we rejected. And I was holding on to them with the expectation that we would test around 290, at least 296, 294 hopefully. But you can see that we never broke the low of Thursday, and we actually on Friday ended up rallying into the close, which made my day or my week even worse. And so that was a struggle fest for me because I read the short well, I followed the price well on Wednesday, but I swung short, something that I almost never do. But I maybe have been trained too much by the March price action to follow what I think will be gap downs. And so we had a gap down, but I didn't immediately take profit. And I remember people that I was trading with, they took their profit immediately, and they were very happy with how it turned out from Wednesday to Thursday. I was pushing it a little bit, and I didn't, and I ended up just stopping out on all my positions. So that was frustrating. And on top of that, around this time, I was watching Zoom. Oops. Come on. I was watching Zoom, and let's look at this chart here. Around right around here, I was looking for a short, or like I was waiting to see if we would fall through the supply zone, and we never really did. And we ended up going sideways the entire first week of December. But I posted a chart on Twitter, and I basically said Zoom has a really nice head and shoulders look, very similar to the one that BA had before it dropped. We have the first shoulder here, the head here, and the second shoulder here, with the neckline being right here. The neckline being like right here. And I was expecting basically a gap fill, and my plan was to buy puts for March back when when Zoom was around 400 for about 350, and I was going to hold those with a stop of around like 430, so somewhere around here above this big drop here. And on the 21st, we actually ended up going right to 425, that supply that was also like right below my stop, and then dropping all the way to 337. So eventually the short would have worked. My idea was right. The reason I'm covering it in this week too is because I posted the tweet on, I think the 9th, was a bit like, Zoom has a head and shoulders, I want to take March puts. And I did not take it. So that was a missed opportunity, and I need to learn better to trust my instinct there on those swings. All right, moving forward. December 3 had a great week. Let me just pull this up really here. December 3 had a great week. I was on Penn, DraftKings, and Crowd. And let's just turn to the DraftKings chart. I know it's going to be a little bit... Don't worry, I'll switch it before I pull it up. Okay, so this is on the week of the 14th, where we are basically here. So I remember we hit my price target at 53. I was waiting for an entry, for a pullback into the supply zone. Lo and behold, we get a pullback into the supply zone, and I'm actually able to enter. I see the setup happening because we have this huge daily bullish engulfing candle. I captured this one. I captured the move up to 53 again, and then I exit up here at my resistance. And then as we return back to supply, I start accumulating in the supply box, just like, you know, someone buying the stock would, but I'm trading options with the expectation to sell at 53 or 55. So I was actually able to get that, the 53 and the 55. So I profited well on that. Same, and I was actually trading pen at the same time. The pen chart had a much better look to it because it was breaking out to all-time highs. You can see that on the 8th, we actually broke up. We put in this nice bullish candle, nice volume, but we sold back down below supply, and we actually ended up holding the 9-day moving average and just continued to push past. I feel like this is a very common pattern that you see. You see like a breakout followed by a big sell, and then we slowly push back up. And I think the big sell is basically all the shorts getting out of the way. I was able to capture not this move, and I might have got a little faked out, but not too much there. But I was able to capture once we broke back above 80 and all the way up to 90. And I was able to capture that because it helped me that I was in DraftKings as well. But these sort of blue sky breakouts are my bread and butter. Very easy to trade, and the option premium jumps nicely with it. So I did that on shop later as well. But anyway, there was also some news going on about like maybe New York will legalize sports betting, so that boosted the stocks as well that day. The other chart was crowd. I had a 180 price target. It was a nice little fib minor here, my major being 214. And I remember after we gapped up here to 160, I remember telling my friends that crowd would be $200 before the end of the year. And I wasn't expecting it to get up as high as it did. And so I actually ended up trading from around 160 to 180. And then I took calls, like I said I would on Twitter, on a break of 181 or 182, and I sold around 186, 187. So I sold before this big gap up. This big gap up happened after the Microsoft source code leak or hack, whatever you want to call it. It was a hack. And we just basically had 3 green bean days all the way past to my target of 214. And that I was holding actually 12/24. I forget what the date was. I was holding 180 calls when the price hit 220. Or sorry, my contracts that I had sold were for 180. And if I had held for that Monday, it was a Monday, I believe. Yep, 12/18. Oh, that's a Friday actually. I had sold the day before, regardless. So I was kind of a sad cookie after that. The other crazy thing that happened, so that the Microsoft hack really just bumped up all these cybersecurity. You can see Palo Alto Networks went bonkers from breakout of like 300 all the way to 375. This is on that news as well. Sale broke out above its range as well. SailPoint Technologies. It went from around 49 to almost 60. So these stocks were really ripping after the Microsoft hack. The other thing that happened this week on the third week of what's it called? Of December was, and December has 5 weeks, by the way, was Tesla was added to the S&P on the last day, the 18th here. And this was a crazy day here. I wonder if I can pull it up on this chart. Yeah, I think I can. All right. I mean, look at this price action. Oh man, this is just really funny because we basically in the last hour of trading went from 627 all the way up to 695, and the official close on the markets was Tesla 695, even though the order came in after the close, which was really odd. But it was around, so you can see that this candle closed, I think it was around 670, but the official close on Tesla at that day, if you look at the daily candle, was 695. And when it was being added to the S&P, I did something really dumb, guys. I did something really, really dumb. I decided to sell covered calls, not covered calls, sell vertical call spreads on Tesla, same day expiration, because I was like, wow, the premium is jacked here. Like the 680 calls, the price is at like 630 and the 680 calls are around $10. So I'm like, you think it's gonna and we're about maybe 5 minutes into before we close. It's like, you really think it's gonna go up $50 in the last 3 minutes of trading? Well, that's exactly what happened. Luckily, TD Ameritrade knows that there's stupid people like me out there, and they refused to let me enter the trade. They said, you cannot enter I don't know, some sort of like position like that on this day. And they knew that Tesla was being added to the S&P, whatever. I've never experienced no one has ever experienced such a large cap stock like that being added to the S&P, and every index fund having to rebalance their shares around that. So I don't really know what the lesson is there, other than don't sell vertical call spreads. Like, I don't even want to do it on anything in the last 5 minutes of trading. I know some people do it very profitably. Day 0 days to expiration, they're selling all these call spreads because the premium can get really chopped up. They dies really quickly if the stock doesn't move anywhere. But I guess just don't do it on Tesla. Like, do it on some other names, not Tesla. So that could have been really bad. That could have blown up my account for sure. Okay, anyway, moving on. Week 4. Week 4, I was minus 1949, but I was actually positive again. Week 4 is the week of Christmas. And Monday, I had a great day. And then Wednesday is New Year's Eve, so it's a half day. And then, so Tuesday, Wednesday, I actually had a really tough time with this week. And I was like, my mind wasn't even all the way there. In the sense, like, I was like, oh, it's a half day. I was thinking about Christmas. I shouldn't have been trading in the first place, to be honest. But you can see here, yeah, here, 23. So this is the day right here. Let me just pull up the hourly chart and then flip the camera again. All right, so I basically, on the previous week, this was something that happened that I didn't really cover yet, but Shop had a breakout, and the breakout level was 1114. And I was like really happy with this. Like it was following everything that happens in a breakout. You had the fat candle breakout, followed by a little bit of consolidation, inside day price action, and then more continuation. And I was very happy with the way this was acting. And I was a little salty because I was holding 1230 calls. 1250 calls, and I sold on this day, the 22nd, around 1230. So on the 23rd, my plan was to dip by around, 1250, 1256, and then sell, as we tested 1280 again, maybe rejected, but we just like captured that like sort of 20-30 point move. But as you can see, we actually ended up tanking the entire day. I think Shop was down around 7% that day. It was so odd. I mean, like, for me, I'd never seen really anything like that, where I'd never seen anything like it on a name that wasn't going parabolic, because Shop was not going parabolic. Like institutions, like Kathy Woods was buying at around like 1200, and it felt like there was a lot of volume to support the move, and healthy volume after like, I don't know, how long did we consolidate for before that move? We consolidated since June, like the end of June. So it was almost a 5-6 month consolidation. And so to give back the entire move like that, I felt was a little tricky, very tricky. I ended up losing almost everything I made on my shop on the way up, on the way down, or I lost it on the way down. And I was like, this is like one of those trades where I was in denial, and I wasn't averaging down. I would roll down my contract strike. So like, okay, 1280 was too far. Let me do 1250s. Okay, 1250 is too far. Let me do 1230s. And it literally never bounced. I was never to recoup anything on it. And at the very end of the day, like 11:59, I was planning at this line right here, 11:47, which was a significant point from earlier. You can see right here, these points right here, the touch. I was planning to just try to get a little 11th hour bounce, and we literally tanked all the way past it into the close. So on that last hour, I actually bought the next week's calls for 1250, and they were trading around like 17, 16, and I bought them. And then by the end of the day, in the last like 5 minutes of trading, they were around 13, 12. So after I was reeling from this price action, I stopped out of it even like within 4 minutes. It was like 1 minute till closing, and I stopped out of it, which was really unfortunate because if I held on to them, the very next day we had a little bit of a bump up. And those contracts were trading for $25, $26 right here. And I could have locked that in and basically salvaged the trade from the previous day. But I had a rule, and I followed the rule about not swinging things overnight after taking a beating like that. So that's a little bit unfortunate, but it is what it is. I follow my rules, and I like, this was a short week, and I was down still $1,200. I felt a little demoralized because I had already. So in the second week, I had lost all my gain from the first 6 days. So I was up 9%, and then I lost all of that in 2 days. And then we had basically another 2-day period where I was up back at a next high, and I gave it back again, like in 2 days. And so that was really frustrating for me. It was really good to get the Christmas vacation, I guess, at that point, because I felt like I wasn't dead in the water. I mean, it wasn't, you could tell it wasn't that bad of a week, but I just felt a little demoralized, and I got my head cleared. I got my charts back ready. I felt like I was trading a little bit underwater those 2 days, if you know what I mean. I didn't have the context of what was happening in the market. I was just kind of like, felt like I was pressing buttons, and I think I was doing that because it was so close to Christmas Eve. Anyway, I basically committed to doing my charts even more the week that followed. This is something that I do consistently after a big loss. I go back to the charts. I figure out what is the best setup. And for me, the best setup was Amazon. I mean, it looked ready. And it was so weird because I said to a few people that it looked ready. And then all of a sudden you see a bunch of like traders on Twitter saying, "Oh, it looks ready. It looks ready." So it was like we all were seeing the same thing at the same time. But what I was looking at was this long 6 month, let me just pull it up, sorry. This long 6 month period of consolidation, right? Since basically July. Oops. Basically July. And then we have a little bit of a pullback into this area, this 3160 area. So whenever I am trading near the bottom, whenever we have a move up and then we pull back to the bottom basically the edge of a range that I have. So the range would be 3160 to 3250. Once we pull back, I start looking long. So when we get to these lines, I look short. When we get to this point, I look long. So what I was looking for to get long was a move above 3200. So the top of this candle. If we get above the top of the candle, then we can say, okay, the downtrend that had been working the previous 5 days, then we can see a little bit of a reversal in this downtrend. And so we actually were able to get above 3250 and into my upper targets of 3290 and my upper target of 3230. So, I mean, my lines on Amazon, I think there's a lot of them, but they work. And so because I was looking for this sort of break of the downtrend line, if I pulled this up on maybe like a 30-minute chart, let's pull up a 30-minute chart. Basically, you're looking for a little bit of a break right here. And once you break above this level of the previous day, 3200, you can start looking long. Because everyone who is short here is going to get stopped out. And people who are looking to buy on this level down here is going to look to be entering. And so you have a little bit of a break there. And when it breaks to the upside like that, Amazon just has potential to move so much in such a short amount of time. I think the way that it moves now is even better than Tesla, and at its current market cap. So what I just went in a very strategic way. I not only bought calls for the week, but I also did vertical call spreads for January 15. So I had like 3350, 400, 3400 call spreads that I would swing overnight, and those really helped maximize the trade. So I'm going to start doing that more in 2021, where if I see a stock breaking out, I'm going to maximize my gain by not only doing what I normally do, which is trade weekly next week options and capture the IV increase and the breakout, but I'm also going to sell put credit spreads or buy vertical call spreads in order to sort of lever myself against the position when I have a sort of breakout like I was experiencing in Amazon, like you sort of saw in Penn, for example, or even Shop. I mean, Shop, when it broke out above 1114 level, there was, especially on the volume that it broke out on, there was a very high chance that it would not go back below that supply zone once it got back above it the second time. So I'm going to start doing that more and more, and I think that that's a good strategy for where I am in my trading. There were some other things that happened this December, things that I can just cover really briefly before ending this long video. I traded net Target Lulu swings, and none of them worked out the way that I anticipated. Target, I was actually up over 100% on my swing, and it pulled back all the way back to the 21 moving average after basically gapping up for 10 days in a row. I should have just took my profit or covered it in some way. It was a poorly managed trade. Net was the biggest disappointment because it looked so ready. I mean, like, I don't know how you could have a stock look more ready than this. And on top of that, we had the Microsoft hack. So we had like basically 5 inside candles. We had an inside week here, and I was just accumulating calls, 90 calls, 90 calls, 90 calls, and we get a really weak move here. That weak move did not move the options in the way that I anticipated it did. I was able to make out with about a 20% profit, but it was just really, really sad for the way that the sector as a whole was moving and the way that the name looked set up. So I was kind of disappointed with that. Lulu didn't work, but what did work was Grog, which has been my best performer this year. ATVI, crowd swings, Riot sort of worked. Also, shop swings or Amazon. So those I've been in December compared to November, October, and September. I swung way more positions, and I think that I have maybe like a little bit of an internal sense of when the market is healthier, when there's less of a chance of like a huge drop off the face of the market, and I'm able to sort of accumulate these long positions going into 2021. Into this new year, I probably have the most long positions in a swing setup that I've had since July or August. So we'll see how that turns out starting January 5th or 4th. I forget what day it'll be on Monday. But there was two other things. The other thing that happened was at the end of the year, there was a lot of profit taking in the sectors that had seen these incredible gains throughout the year. I think that's normal. I wasn't able to capture anything on the short side or the long side, really. I basically just stayed away from them and focused on the larger caps. So we see profit taking on Square. We see it on Roku. We see it on TDoc. I mean, there was just like all these names that had seen massive gains during the year, basically pulled back. And so I think that's normal. I mean, people are going to take their profit for the year on stocks that have returned 300, 400% for them, and rotate it into what they think it will have a better rate of return in 2021. I still think that these stocks will be strong, and the sector was sold off as a whole, so we'll see which ones rebound properly. I think that there are some names that stick out to me more than others, but that was an interesting development toward the end of December. One that I guess I don't think I've had experience in a sort of sector sell-off like that at the end of the year in quite the way that it happened, but I now know what it looks like and know that I can profit from it the next time that it happens. So if you have any comments on how your December went, things that you did right, did wrong, names that you traded and traded well. I think the Amazon trade was my best trade of the year, maybe. Not really my best trade of the year. It was just like a really well managed trade. But I was happy with where I ended December. Not really happy with how I executed throughout December. And I'm looking forward to more consistency in 2021. But if you made it this far, really appreciate you watching. Really appreciate your engagement on Twitter, in my comment section. I really appreciate the way that FinTwit is a community that we can all help each other out. If you have any suggestions for 2021, any goals you'd like to put, I will be covering that more in my 2021 or 2020 yearly review, which will be coming out soon. I think this video has gone on long enough, and y'all are troopers, so thanks for sticking through this with me. All right, on that note, peace.